What's up, everyone? Welcome back to another video with the Bear Report. In this presentation, we're going to make our way into the real estate sector and discuss the healthcare REIT called Medical Properties Trust. There have been lots of rumors on MPW over the years, but it now looks like these rumors are coming to fruition. And unfortunately, it may have severe consequences for MPW's future. Before we get into it, make sure you subscribe to our channel so you stay up to date on all our future content. And also, make sure you give us a thumbs up if you like this video. The first thing we're going to talk about is overall management. Here, we will analyze insider activity, their poor decision making, lack of transparency, the Steward healthcare debacle, and the multiple ongoing lawsuits. Next, we will discuss the core business, where we look at their financial statements, their liquidity concerns, and our ultimate bear thesis on the company. As many may know, MPW operates as a real estate investment trust specializing in healthcare properties. So they acquire, develop, manage, and even do complex financing arrangements with essential healthcare hospital providers like Tenant, Steward, and Prospect, to name a few. But their primary goal is to lease these buildings out to these providers under triple net long term lease agreements. This basically limits and reduces the overall risk for MPW since they have little responsibility and are locking in these longer terms. We will get into this later, but this only works if you have an excellent vetting process and have sound decision making. But in this case, MPW lacks both of these, which has them in their current situation today. And for some quick facts on MPW, they were formed in 2003 and IPO'd on the public market in 2005. They were also the first US based company to invest in hospitals globally. So the American company was actually the first of its kind to be operating in this unique way. The company has a large global presence operating in three continents, which are South America, North America, and Europe, in a total of 8 countries. Their portfolio consists of 439 properties, and their total asset value is just over 18 billion. It's important to note, if you can see down here on the right, in Australia, MPW used to have presence in this country, but they had to divest that portfolio, unfortunately. Supposedly, MPW has a rigorous underwriting process that puts them in a favorable position to succeed. They really like focusing on these four characteristics here that make a facility attractive to experienced and competent operators. These are physical quality, demographics and market competition, and financial. Each of these, according to MPW, have their benefits, which they highlight as high quality and modern tech in these facilities, desirable work, living environments, measurable patient growth, growth constraints on competitors for competition, and high startup costs for new market entrants, and obviously a strong pro forma to their future cash flows. If a potential opportunity doesn't meet any of these requirements for MPW, they will not proceed with it. Lastly, the management team is still founder led, which is quite unusual considering how long they've been operating for. Most founders would have gone to the exits by now, but MPW is indeed still led by its founders. At the head of the company, we have the CEO and founder, Edward Aldug. Then below Ed are the other co-founders, Steve Hamner as CFO and Emmett McLean as COO. Now let's go ahead and get started with discussing management, where we will look at everything that falls under this category. What we are looking at here quickly is the stock price history over the last decade correlated with the timeline of events that have happened and brought this stock price down to all-time lows. So as seen, at the left we start at 2013, and I labeled the IPO just so everybody knows that this company IPO'd in 2005. As we make our way into 2014 up into our peaks in 2020, this is when the company was scaling at a rapid pace successfully, and there weren't any irregularities or concerns about MPW at the time because there was consistent execution. Then moving into 2020, we had the COVID crash. Then MPW made a great comeback, reaching nearly $24 per share. Progressing into 2022 now, we hit our increasing interest rate and inflationary environment, and also rumors about MPW being intertwined with fraud and financial distress with tenants. Real estate was directly impacted by higher rates at this time too, obviously, which fueled this decline in the bear market. Shortly after these rumors plagued in 2022, as we headed into 2023, Viceroy Research and other smaller short firms came out with valid evidence and allegations about MPW's financial situation and potential fraud. This crushed the company's stock price down to $2 per share. Now the company sits near all-time lows, with most of what Viceroy research has come out with actually has come to fruition and still ongoing. To tee this off, we're going to take a look at insider buying and selling from the management team since IPO in 2005, which includes the board as well. I don't want to focus on this too much because there are really no concerns here, but to be transparent, it's a great idea we take a quick look. Also, it should be noted that many of the early management team members are no longer with the company. So some of these early buys and sells are from management team members that are just not at MPW anymore. Since IPO up until current, there have been an overwhelming amount of direct sells with just a select few of direct buys. But none of this is really concerning, like I said, since the founders all have much larger positions today through options. I will say, though, there has only been one direct buy since 2005 from the three founders, which is kind of odd. Usually, shareholders like to see management teams that have some skin in the game instead of relying on options for reassurance. At the horrific decline from 2022 over here until current, we have three direct buys, and these are from two board of directors, Steve Dawson and Elizabeth Pittman. These buys, they also don't have much weight attached to them. We also have our insider buying for the past 12 months here. There have been a total of 4 transactions to buy at a value at nearly $275,000. Just so we all know it, we also went back to the company's S1 prospectus in 2005 and found the founder's ownership after the IPO offering. And as you can see here, Ed had the highest ownership stake, with the other co-founders slightly behind. Then I have our current ownership of the founders as seen. Their stakes are significantly higher since IPO. Even though there isn't much weight carried from their positions, they do have a higher ownership stake since IPO. Therefore, we don't find this insider activity too suspicious. Although, we would have liked to see more insider buys near our all-time lows for shareholder confidence. So before we get in depth with the Steward healthcare crisis, I want to emphasize how complex this situation is. There's a lot going on here outside of Steward, which we'll also vaguely touch up on, but our focus for this presentation will primarily be on Steward. So I want to give a brief overview on how much weight Steward has inside MPW's portfolio and why this is very serious before we get into the chain of events on how this all started in the lawsuits. As of their most recent 10K, Steward makes up 19.2% of MPW's entire portfolio. And seen on the far right, it's actually decreased from 2022 since they have been divesting assets to limit their risk. MPW has been divesting. Since Steward's book value has decreased and has been in financial distress, MPW has had to make significant accounting adjustments intertwined with liquidity issues and impairment charges, which has caused a major decline in total value of assets relating to Steward. Steward is also behind on rent as as of their latest update in 10K. It is said that they are committed to repayment of $50 million of rent owed. Management hasn't been too transparent on this, but that is how much they are owed according to them. Lastly, Steward did in fact file for extreme financial hardship with the CMS, which is basically meaning they need help financially or they won't be able to operate. You may be thinking, like, why doesn't Steward file for bankruptcy or restructure? Well, that's because they are an essential healthcare provider and they need to remain active and liquid. So the CMS will be helping them out until they figure out the cash flow problems at Steward. But if this fails, they will have to take the bankruptcy route, unfortunately. So now we're going to take a look at how this entire debacle started with Steward and the serious allegations and fraud leading up to it. This is extremely complex from here on out, but we have tried our best to visualize and describe what has happened. Then we will also show proof with multiple lawsuits with MPW, Steward, MPW's tenants outside of Steward, and the United States government, and Viceroy. So back in 2010, Steward Healthcare officially formed as a business under capital management company called Cerberus. As we fast forward into 2016, Steward was expanding faster than they could keep up with, trying to establish their base, and MPW started to get into sale leaseback deals with them. Now, at this point in time, I truly believe this is where MPW management messed up because we could see under Cerberus's management, this was going to be a long term financial disaster with a domino effect because they were spreading themselves way too thin. So, shortly after this, heading into 2020, a group of physicians at Steward wanted to acquire Steward and break away from Cerberus. This is when MPW's poor decision making gets worse. Actually, they decided to enter into complex financial agreements, including heavy borrowing to make this transition happen. Like we said earlier, at this point, Steward was already spread so thin from Cerberus's aggressive growth plan, and the damage was, it was kind of already done. As we hit 2023, this is when Viceroy published their short report alleging fraud and financial disasters within MPW and Steward. This fueled to that rapid decline we saw in the share price um, in the stock price history slide. So midway into 2023, MPW makes a strategic move to file suit against Viceroy. Some, some people, including us, thought this showed MPW as not guilty toward the Viceroy allegations. But what changed our entire perspective to bearish going forward with this was the way MPW was responding when Viceroy was asked for financial documents relating to Steward, the events that were going to occur with them, plus the additional suits against MPW and their tenants. This whole entire thing, the situation just didn't make any sense. In late 2023, Steward filed for extreme financial hardship, like we said, which reinforced Viceroy's allegations and painted a horrible picture for the future of MPW since they occupy nearly 20% of their portfolio. Then after that, like we just said in 2024, MPW refused to provide the documents Viceroy requested twice, which is really concerning. Um, then, as most recently, Viceroy strategically got a subpoena duces to come for PricewaterhouseCoopers, which is MPW's auditor, for them to provide the essential documentation Viceroy needs for their case against MPW. We will get into more detail about this with the actual lawsuits themselves, but at the time of this presentation, is actually being developed. These documents will likely be given to Viceroy, making it a major event for this entire legal battle. Viceroy was also able to solidify their stance with a Senate letter from the senators of Massachusetts, where Steward has significant presence, basically saying how corrupt their operations have been, damaging the state of Massachusetts' essential healthcare system. Lastly, I put here what's going to happen next for MPW, because right now it does not look good at all for them at this very moment. We're going to start getting into the reports and the lawsuits in order now. So, how this really all started to get serious is when Viceroy published their short report on MPW. Basically, in this first short report, Viceroy alleges that MPW engaged in uncommercial transactions, starting like a revenue round robin scheme and theft, and also highlighting distressed tenants in their portfolio, bailouts, cash giveaways, and even fake builds with their tenants. And they ultimately call on MPW for scrutiny and transparency, which is actually pretty valid considering most of everything Viceroy alleges has come to fruition and is still playing out as we speak. Then, shortly after they published their short report, Viceroy did 3 separate case studies on Steward highlighting fraud and extreme financial concerns that have been fabricated by MPW. What really raised eyebrows to Viceroy and other short firms, including many retail investors, is when the first lawsuit was filed against Steward by the United States government and a whistleblower, Omni Healthcare. This is what put MPW on the hot seat. Apparently, Steward violated the anti-kickback federal law and were given kickbacks. So basically, they engaged in fraudulent activities against government healthcare programs. So this case in itself is obviously not good at all. We're talking about fraud and violated federal laws that have been sacred to the United States. As time moved on, we receive a suit filed by Steward against tenant, saying they are in extreme financial hardship and won't be able to make their payments, and that they will be receiving help from the CMS, the Centers of Medicaid and Medicare Services. So again, Viceroy was right about this as well. Tenant actually countered this which we will show here in a minute. While the rest of these suits were ongoing, MPW and many of their tenants, including Olympia, were accused of fraudulent activities with the CMS. So basically, what happened here, although MPW, the business, is not directly involved, but their tenants that occupy MPW properties are, brings MPW into the mix and are accused of receiving overpayments by the CMS and not repaying the overpayments back. The reason why this is so serious is because that's a federal law that they did not comply with, and also alleges that financial assistance was fabricated to receive these overpayments. This is another serious allegation, and it hangs over MPW and MPW management for poorly facilitating this entire situation. Management should have been micromanaging these complex situations. If they did, this would have likely never happened. So back to tenant health and Steward. As time progressed, tenant decided to counterclaim Steward on their extreme financial hardship, requesting financial documentation that proves they are indeed suffering with severe liquidity issues. I thought this was interesting because tenant is suspect on whether or not this is actually true. I don't blame them either, since this would mean new terms and agreements on the leases that are less favorable to them and them as in tenant. As we start to get into current, this is where things get interesting. MPW decided to file suit against Viceroy for making false accusations that damaged their stock price. I think this was rightly done and strategic by MPW management. However, this is where it starts to get very bad for MPW. Viceroy actually counterclaimed this suit, asking for necessary documentation to prove these allegations are either true or not true. This was a great move by Viceroy. Basically, Viceroy's move is like saying this: if you're going to file a lawsuit against us for these accusations, fine. Just provide your documents so we know it's false then. The issue with this, after Viceroy outlined specifically what they needed, MPW refused to give them what they asked for. They actually refused them twice, which now raises eyebrows on whether or not MPW is guilty in trying to cover up the mess they created. So what Viceroy did is they somehow received a subpoena duces tecum against MPW's auditor, PwC, PricewaterhouseCoopers. What this means is PwC has to, by law, give Viceroy the necessary information on MPW, since MPW directly won't cooperate with Viceroy. So back to what we were saying earlier about this. The subpoena is due March 21st. That's when all this information needs to be received by Viceroy. So good or bad news could be released as this presentation is being developed. Either way, this is where MPW, Viceroy, Steward stands as of current. And to top everything off, and I don't know how Viceroy was able to do it. They were able to get both senators from Massachusetts to write a letter to the CEO of Steward Health, going over how disgusted they are with Steward citing their financial distress uh, from mismanagement, unpaid debts and suppliers, sketchy financial transactions, and much more they labeled in there, concluding with a request to respond on the same day the subpoena is due. So right now, I think it's safe to say that Viceroy kind of has MPW trapped. This brings us to the elephant in the room that hangs over MPW management, and that's that there is a major management problem. We conclude this because the entire situation with Steward could have been avoided, for one, and secondly, the CMS fraud could have also been avoided. As of right now, the share price is definitely warranted from all of this. Steward makes up 19% of MPW's portfolio, and they are in extreme financial distress, along with many other tenants like Prospect. Again, this also could have been avoided by doing thorough due diligence on Steward's growth in future. They also have all these lawsuits connected indirectly or directly against them, and not to mention the multiple financing agreements MPW has with these entities in their portfolio. And the icing on the cake here with this, the management problems, and I wanted to input all the letters, but it would have taken way too much time, is management has received over 25 letters from the SEC on their accounting practices, lack of transparency, and suspicious financial arrangements that need clarification. In the past, we have gone over thoroughly what it means when you receive these letters and the meaning behind them, but REITs are highly regulated, and we understand that, but the amount that were sent and the material in them is what's concerning. And this points to poor management practices by MPW. Now we're going to get into the core business and look over the company's financial statements, liquidity issues, and the bear thesis. The first thing we're going to look at is MPW's recent 10K income statement. What we're going to do here is look at the year-over-year percentage increases and decreases for the notable metrics. Um, as we start up at the top here, we have the straight line rent at a loss of 127 million, which is down year over year at 37%. This is primarily from Steward. So this is basically from the new accounting methods and expected lower payments from them. Then we have our total revenues below that. This is at 871 million, correlating to a 43% decrease year over year. Again, this is primarily attributed to Steward and other tenants in their portfolio that have been struggling financially. As we move our way down to real estate depreciation and amortization, we actually have an increase of 81%, representing a 603 million uptick. This was also affected due to Steward's properties in Utah, reassessing property value and lease agreements. Below this, analyzing total expenses, this caused an astronomical uptick in expenses, unfortunately, at 1.2 billion, which is a 33% increase. Now, when we move below this to their impairment charges, we see another large impairment at 376 million, which represents a 33% increase. Because the fair value or market value of certain assets fell below their carrying value on the books. So this can happen for many reasons, but it was from operational challenges from their tenants affecting the future cash flows expected from the properties. Specifically, they were transactions involving Steward and the sale of 3 prime properties, as well as the Australia transaction, which we went over early in our presentation. This led MPW by law to recognize impairment charges. Essentially, MPW had to acknowledge these assets, that they were worth less than previously recorded. Getting down to the bottom here at net loss, we actually went from profitable operations to unprofitable by a larger margin. Net loss was at a 556 million, so representing a 161% swing. So now the company is operating significantly in the red and will likely continue and stay inconsistent, so it'll be volatile due to the financial struggles within their portfolio. And lastly, we have our dilution at the bottom. The share count actually decreased slightly. Doesn't necessarily have a major impact here, but wanted to point this out. What we're looking at here now is MPW's recent 10K cash flow statement. This is the same as last slide, where we look at the critical metrics and their year-over-year increases and decreases. At the top, we have our net loss, which we just went over last slide. If we make our way into the middle here at net cash provided by operating activities, which determines whether or not the company is cash flow positive, we can see they brought in $505 million dollars of cash, but it's a 37% decrease year over year. They are indeed cash flow positive, but they are bringing in significantly less cash now and will likely continue to stay at these distressed levels. We will show why this is not good when we look at the rest of the cash flows below. When we go further down at net cash provided by used for investing activities here, we have an increase of 30% year over year at 517 million. I have this in red since they are having to divest assets here, but it did give them some extra cash. And without this move, they wouldn't have been able to cover that dividend, which we will get to below. And this is something I heavily want to emphasize. And that's in fact that this dividend, or as seen here as distribution paid, the company is obviously struggling financially and they are still paying a hefty dividend. They need more cash. So management decided to cut their dividend to 15 cents a share. I'm not sure why they're even making this dividend a priority right now. This was another poor decision by the team. The dividend should be suspended until the company is back to profitable operations. Because now, if we go down to net cash used for provided by financing activities, the company spent an astronomical amount of 1 billion. 50% of this is from their dividend to shareholders. So I'm not really sure how this makes any logical sense. Although this metric represented a decrease of 26%. It's still way out of MPW's control and it will haunt them in the future. Some of this partial decrease could be attributed to their decision to cut the dividend, and we are starting to see some of that take effect here. Lastly, when we go to the very bottom, cash increased almost 6% to 255 million. I think we're being nice by putting this in green and giving them credit for an increased cash position, but this is definitely concerning when we look at the big picture. After all cash flows, the company only brought in 14 million. So we have here on the left, why is the company still paying a dividend when they could have saved a boatload of more cash? And not to mention, I mean, the unpredictable future for MPW's liquidity from tenants struggling. We have to ask ourselves going forward with the financial struggles with their tenants and hefty dividend distribution to shareholders, how can we have confidence in MPW to stay financially healthy here? Like we went over in our last slide and in this slide, revenues will be inconsistent and likely headed on the downtrend. And in return, we will get more net losses. So, how can we have a bullish perspective when the company is also living quarter to quarter with their cash flows? So, we currently see MPW in a severe liquidity position at this very moment. What we're going to take a look at now are the visual illustrations of their current liquidity issues from their 10K. This should give us a better perspective on how this company is struggling financially right now and will likely continue to get worse. As seen right here, we have MPW's tenant composition. Steward occupies the most at 19.2%, which is extremely concerning since this is the company currently accused of fraud and in extreme financial hardship. But as seen, MPW has had made significant divestments with Steward from 24% in 2022 to 19.2% in 2023 to limit this downside risk. Unfortunately, this number is still way too high, and MPW is still exposed greatly. Also, it should be noted that there are other operators struggling financially other than Steward. The most notable would be Prospect, who occupies another large percentage of MPW's portfolio. Below this, MPW announced their dividend cut and said they will save around 330 million a year. Like we were saying earlier, this still isn't sustainable for them with losses growing and revenues shrinking. It's a step in the right direction for sure, but this should be suspended until there is a clear macro for MPW. Also, like mentioned previously, the company has been working diligently to divest assets related to Steward. In order for MPW to maintain and cover distributions in some expenses, they will have to strategically find ways to make transactions to get cash flow. They've been doing a great job with this, but it's just not sustainable over the longer term. And this is what gets us to our ultimate bear thesis on MPW, and that's that the company is suffering from severe liquidity issues and is likely suspect to fraud with Steward and other tenants in their portfolio. With the multiple lawsuits directly and indirectly tied to MPW regarding legal kickbacks, CMS overpayments, and suspicious transactions with Steward, leading to the legal battle between MPW and Viceroy. I mean, this starts to make sense. It all adds up. In addition to this, the poor management decisions coupled with no transparency and the business becoming victim to cash flow problems from multiple tenants in financial distress. I mean, this overall points to a very bearish outlook on MPW's future. If management can get their heads screwed on straight, it's possible they can make a turnaround, but it looks like the damage has already been done, unfortunately. But that is it for this presentation on MPW. If you like this content, make sure you give us a subscribe to stay up to date on our bi-weekly videos. And do us a favor and give us a thumbs up. Thanks for watching.